Hi everyone, I'm Ashman from AmInvestment Bank, and today I'll be speaking to you on one of our top picks from the Bursa RISE scheme, Deleum Berhad. Deleum is an integrated oil and gas services contractor catering primarily to the upstream segment. Now, the group's business is classified into three main segments. First is power and machinery, which focuses on the provision of turnkey solutions for combined heat and power plant and complete life cycle support for various partners, particularly Solar Turbine Inc., a renowned manufacturer for mid-range power turbines with generating capacity of up to 23 megawatt, wholly owned by Caterpillar Incorporated. Power and machinery accounts for 72% of 2022 revenues. Second is oilfield services, which focuses on upstream activities in the subsurface sector, which are activities below the wellhead. This comprises of slick line and well services, such as maintenance of the wellhead and gas valves, treatment of specialty chemicals, and well stimulation and provision of related asset solutions. This segment accounts for 17% of 2022 revenues. Last is Integrated Corrosion Solutions, ICS, which offers various types of corrosion inspection and mitigation works for the oil and gas industry, including surface preparation. This accounts for 11% of 2022 revenues. We believe the primary catalyst in the near term for Deleum is the recovery of its ICS segment following the lifting of suspension of its license with Petronas in December 2022. As a niche oil and gas contractor, Deleum is expected to benefit from an environment of elevated oil prices, which is typically supportive of higher or sustained capex spending by oil and gas companies operating within the exploration and production subsector. We have seen Brent crude oil prices register a strong performance this year and expects the full year price for 2023 to end at $80 per barrel, close to our initial estimate of $83. This is accompanied by a 48% year-on-year increase in Petronas domestic capex to 10.5 billion ringgit to support increased activities as at the first half of 2023. Given the current supply and demand dynamics, we expect Brent crude oil prices to remain elevated at current levels of $85 to $95 per barrel for 2024. We believe this will underpin a strong tender environment in the near future, particularly as substantial upstream maintenance works were delayed during the COVID-19 pandemic, leading to an estimated backlog of 2 to 3 years. We gather that Petronas is expected to begin tenders for its maintenance, construction and modification services works as early as the middle of October this year, amounting to a total of 8 billion ringgit. Now, management targets to secure 5 to 10%, implying an order book replenishment target of at least 400 million ringgit from the ICS segment in the medium term. Further to this, management indicates that the group will also be involved in new rounds of bidding for sponge jet projects in Indonesia at a later date. Due to the ICS segment's fully depreciated assets, we expect to see these bids accompanied by strong margins, possibly at low double digits relative to its pre-pandemic performance. For reference, Deleum's order book as at the 30th of April stood at 551.9 million ringgit, whilst its tender books stood at 323.9 million ringgit, consisting mainly of the power and machinery contracts, followed by oilfield services. Correspondingly, we see delays to job wins as the biggest risk to the stock, as it will impact the recovery momentum for the ICS segment in the medium term. To summarize, we maintain our buy call on Deleum with a fair value of 1 ringgit and 22 cents per share, pegged to a 2023 price to earnings multiple of 12 times, broadly in line with the Malaysian oil and gas operators average. Now, our fair value implies a 3-star in-house ESG rating. Deleum currently trades at an unjustified price to earnings multiple of 10 times, 8.3% below the sector. Stripping out the group's net cash, we find the stock trades at a bargain 2023 PE of only 5 times relative to the sector.